Welcome to Tech for Good with Bethnal Green Ventures. My name's Paul Miller, and it's fantastic to be joined today by Dougie Sloan from Better Society Capital. Hello, Dougie.
Hi, Paul. Great to be talking to you.
So let's start with what you do. I think you're the first LP, as you're called, that we've had on the podcast. So could you explain what being an LP means, and then how would you explain your work at Better Society Capital to someone who you've just met, let's say, somebody who's not an expert in impact investing?
Yeah, for sure. And so LP means limited partner, which in a very narrow sense means person or entity that invests in venture capital funds, which are typically structured in that way. But investor in funds is sort of the shorthand. We do a little bit more than that in other ways as well. So to unpack your other question, personally and in relation to our venture work, I describe what I do as being an investor and community builder, trying to make the world better through technology. And that means looking for places where two things are true. Firstly, technology can deliver positive impact, which is not true always and everywhere, but where it is true, we think is very, very true. And secondly, that building a company with impact at its heart can drive commercial success as well. And so tech delivers impact, and impact driving commercial success. We're looking for places where those two things overlap. And we act on that in our venture work at BSC by investing in funds, working with those funds on this impact thing and how to do that really well in practice. And then thirdly, looking to build the broader movement around impact in venture, which we mostly do through Impact VC, which we'll come on to later. And then broadening that out to Better Society Capital or BSC as a whole, because we do quite a bit more than venture as well. The line around BSC is that we're an investor and market steward, helping money flow to tackling social issues in the UK. And if the person I was speaking to looks like they're somebody who would like to have the numerical take on that, I would describe that as we've committed just over £1 billion to over 100 funds over the last 12, 13 years and helped the market for the kind of thing we're looking to grow by 12 times in size in the first 12 years we've been around. And then maybe the kind of broader, more maybe philosophical take on this is we often think of ourselves as a systems change organization that happens to be an investor rather than the other way around. And by that, we mean we aim to think long term, understand our role amongst others, bring the tools we need to shift more money towards impact, which often is our investment, but also can be things like policy and advocacy, network building, research, digging into impact practice, helping other LPs invest in different ways, all of those sorts of things, adding up towards tackling social issues in the UK more effectively.
Yeah, and there's also, there's a pretty interesting backstory to BSC as well. A pretty unique organization in terms of even just the way that it came about. Just talk a little bit about that so people understand.
So BSC was set up 12, 13 years ago now with a mandate to grow the market for impact investing in the UK. So effectively channel more money towards social issues. And we were capitalized at that point with £600 million on our balance sheet. And 400 million of that came from this thing called the dormant accounts, where if you had a bank account in the UK and you didn't access it for 15 years, it would get pulled into a central pot held by Treasury. And Treasury have done some maths around how much of that might be claimed when people remember they had 50p in a student account from 15 years ago, and how much they can put to use elsewhere. And significant amount of this capital have been deployed towards impact investing and other good causes in different ways. So we have, or had at the start, 400 million of that, and 200 million in 450 million chunks from the 4 high street banks as part of the kind of post-crash workout element of some of their engagement with government as well. And we invest that money off our balance sheet in a evergreen fashion. So if it returns what we intend it to return, we can do that indefinitely. And the key part here is bringing in money from others, because 600 million is quite a lot of money, but in the context of the amount of money we need to solve the issues we face, or the amount of money in the broader financial system, is really quite small. So a lot of what we're trying to do is use that starting point and that sort of, as you say, slightly interesting backstory as a building block to then shape the broader investment ecosystem further towards impact through all those different tools that I mentioned, through our own investment and ultimately through unlocking capital from others.
And there's some pretty impressive numbers in terms of the amount of capital you have unlocked from other investors over the years.
Yeah, and this is a number we track closely, and I think it's around 3 times. So for every pound we put in, it's around 3 from other people. Varies a little bit by asset class and vintage and those sorts of things, but that's a number we look at as one of our key KPIs, I guess.
And what personally drew you into this world of impact investing? Did you always imagine yourself working in doing this kind of work?
Yeah, right from age sort of 5 or 6, I thought I'll be an impact investor. No, so My background was much more prosaic. I was in strategy consulting with Boston Consulting Group in London, doing bits and bobs across a range of different sectors. And I had a sense I wanted to do something in impact. And I think I'd had that right from pretty early on. I wanted to do something in impact and something positive and meaningful with my day-to-day. And as I was spending time at BCG, I was trying to do some of that off the side of my desk and to the extent that I could. So there were a few things around afternoon workshops with impact-oriented accelerators, helping them think through strategy in different ways, as much as you can in an afternoon, which is not very much, but we're trying to do what we can, and setting up and working on various other ways of bringing some consultant time to small impact-oriented organizations that we felt we could make a difference with. And from doing that for years, I realized I was getting much more energy and enjoyment and meaning from that part of what I was doing than I was from anything else that I was doing. So I then thought, how do I test this hypothesis? I can, do this full time. And so I looked for a secondment initially to test that out and started having coffee with BCG alumni and asked them who else I should speak to, and sort of coffees begat coffees. And after about 30 odd of those over 6 to 9 months or so, I'd come across and got myself up to speed on this thing called impact investing and a few of the key organizations that were involved in that space. As it was then known, Big Society Capital was one of those. So I originally joined for what was meant to be 9 months, nearly 9 years ago, to help write our 2020 strategy. And at that point, sort of late 2016, 2020 felt quite far away, and it was a sort of bigger kind of blue sky exercise around what was working at that point, what we could build on, and these sorts of things. And I think some of the things that drew me to impact investing then were around the outsized impact you could have, the system level way of thinking and engaging, bringing others with you, and the fact that it was quite heavily people oriented as well, understanding people, building relationships with people over the long term. And I think all three of those things, so the outsized impact, the system level engagement, and the sort of people orientation, are even more true in the venture part of impact investing as they are of the broader part of impact investing. And my path gravitated towards and quite quickly became wholly venture in that time at my first few years at BSC were a bit broader, but then for the last 6 or 7 years, I've been almost entirely venture. And that's driven by this people orientation and some of the difference you feel you can make in this space, I think.
Yeah. I mean, you touched on it there, but you helped start Impact VC, which is, almost, as I understand it, grew out of your work at BSC in terms of trying to do that system change piece. But what was the idea behind it, and why did you think the venture world needed it?
So we had a few observations from our investing at BSC, and we set up Impact VC. It went public not in the sense of an IPO. It went public in the sense we started telling people about it in early 2023. We'd been working on it a little bit in 2022. And I say that by way of context. We'd spent 10 years investing in venture at that point, and we've been doing it sort of really in earnest for about 4 or 5 years at that point, including with firms you might think of as traditional impact investors, but also with venture firms who are a bit newer to the impact idea and wanted to bake it into what they were trying to do and invest in different ways. And our observations from those interactions over that period of time led us to think something impact VC shaped would be really powerful for the ecosystem. And we distilled that at the time as 3 things we really liked and wanted to build on, and 2 things we wanted to fix. And the 3 things we really liked were the increasing evidence that tech could deliver really meaningful impact for the people and issues that need it most. Secondly, that venture capital was getting more interested in impact. And we saw that come through in the deal flow stats at startup level and fundraising stats at fund level, but also in some of the big mainstream firms starting to use impact language in different ways. And the third piece was around these business model drivers behind impact, being able to drive commercial value in different ways, engaging customers, talent, regulators, capital providers in different ways. And we thought that meant this was not a flash in the pan, as it were, but this was a theme that was here to stay. And so those 3 things opened a real window for opportunity to have a really significant impact. And the way we framed that with Impact VC is unlocking the impact potential of venture capital. But we thought there were 2 things that we needed to do to unlock that potential. And the first of those was the issue that there were quite a few people working on impact investing in venture capital, but the connectivity between those folks wasn't as strong as it could be, particularly across borders, and particularly between people that had spent 10, 20 years in impact and people who are really new to it. So we wanted to create that space for connectivity and learning. And we did that by building a now global community of VCs learning about and accelerating the topic of impact. The second piece was around guidance for impact practice and how to kind of do impact, as it were, where there's a lot written down about that again, but it was quite academic. A lot of it was for later stage or bigger companies, better resource companies. And we wanted to produce something that was really valuable and proportionate for seed stage companies, plus or minus. And we did that by getting together several dozen VCs, I think including Bethnal Green Ventures at the time, actually.
Yeah, no,
And we worked on producing the VC Impact Playbook that was a first resource of now several resources that are aiming to provide the tools to help folks invest effectively for impact early stage. And so that kind of resource building co-creation piece is the second big stream of work we do. We added a third stream about a year into Impact VC existing, which is where we realized that to really shift the system and to shift people's kind of mindsets and behaviors around impact, it took more than peers to speak to and some frameworks and tools, though they were really helpful. It also would take guidance and application in practice. And that's when we started running training and coaching. And we've now trained 50 something at the last count VCs on enacting some of the things we talk about in the playbooks in different ways. And I mean, also, as you say, BGV have been right there from the get-go. So we've been really, really appreciative of your support in helping us reach those conclusions, in your guidance, and particularly Adama has been fantastic in guiding how we think about community building in this context and all of these sorts of things as well. So that journey is something that it feels like we've very much been on together.
Yeah, absolutely. I think it's really interesting how international it's become as well, because, certainly when I'm talking to startups, sometimes other firms in other countries, they've heard of Impact VC. It's really interesting how the idea of tech for good investing, impact investing, has grown over the years. And BSC, although you've got such a focus on the UK, Impact VC allows you almost to talk to those international partners as well, doesn't it?
Yeah, absolutely. And actually, that's a key point I should have mentioned. Thanks for the kind of nudge to clarify that point. So BSC invests for social impact in the UK, and Impact VC is global, and it's about social and environmental impact. Yep. And one of the great things that does, as you say, is it opens up the surface area of really interesting people and learning and partners that we can talk to about impact in venture in different ways. And that learning curve has been pretty incredible. We've started with a UK and European centricity to the community, because that's where our networks were to begin with. But there is now a really interesting global footprint across the nearly 1,000 folks from more than 750 firms globally that are part of that community in different ways. In the preamble, you mentioned you're just back from Japan. Actually, one of the interesting clusters of interest in impact investing, which we've really seen through Impact VC as well, is in Japan. And maybe to illustrate your point around international reach, the two playbooks we've built through Impact VC, the startup facing one and the VC facing one, are both available in English and Japanese, because folks in Japan have translated those two resources for use over there, which is great to see. Yeah,
certainly we're seeing some interesting developments in impact investing in Asia, particularly Japan and South Korea, I think. So it's super interesting. So switch gear a little bit now. One of the interesting things I always think when you're an LP is you've got even greater visibility of the startups than we do as a VC, because you see the VCs, all the VCs, not just all the startups, as it were. From your view, what makes a tech for good or an impact tech startup really stand out?
I think there's probably three things. And the first of those is intentionality. So having a really clear mission orientation, understanding what impact you as a founder or you as a firm want to have, and being able to articulate that in a really clear, powerful way. First point. Second point that's linked to that is having a big vision for transformative impact. And that's about ambition and scale and depth of impact, and really thinking, if we use technology in the right way, we can really shift this system, and this is how we're going to do that. I think that second piece is really powerful as well. And then the third piece for me is having a thesis for how the commercial and impact parts of your organization come together in different ways and how they reinforce each other. So in some parts of the impact investing world, there's a trade-off between scale or depth of impact and the commercial building. I think venture is not one of those places. And I think in certain venture business models, you can have really powerful reinforcing flywheels around that. Yeah. And when you articulate that really clearly and you see firms act on that really effectively, I think you can then have a transformative scale with really large commercial companies and really large impact.
And how do you think the founders should think about that? Because, I think we talked about this in the past, and certainly in some parts of the impact investing world, it's thought of as a spectrum, isn't it? Almost that you've got high impact at one end and high returns at the other. How would you advise founders to think about that business, how you match the business model onto the impact?
So for us, I think it comes down to aligning the two pieces and I think the concept of positive reinforcing feedback loops or flywheels is really powerful here as well. You're looking for places where doing impact well and putting that at the heart of how you show up can drive those commercial flywheels as well. And we think we talk about this as impact as a driver of value. We think there are 4 places where this is particularly possible, or levers that a founder could pull in different ways. One of those is around acquiring and retaining talent. One of those is around acquiring and retaining customers. One of those is speaking to regulators and getting ahead of the regulatory curve in some ways. And then the fourth one is around capital, both in terms of unlocking venture capital, if that's the path you go down, but also potentially non-dilutive capital in different ways. A lot of those flow from the kind of starting choice of where and how you choose to play based on the founder insights you have in sort of which market, which customer, what problem are you solving for that buyer, which impact-oriented lever can you pull that helps you sell better to that buyer or engage better with your talent in different ways. And maybe one example to bring that to life is a company called WageStream, which works to improve the financial well-being of frontline workers. And they have a number of products, but their first product was earned wage access, where partway through the month, you could access the part of your wage you had earned up to that point in the month. And one of the really interesting things about that business model is they were selling to and through employers and helping workers. And the better they could evidence they were improving the lives of workers, the better they could sell to employers. So there's a really powerful flywheel there between delivering better impact, measuring it better, with also your commercial sales cycle. That's the sort of flywheel we're really looking for and talking about when we're talking about that sort of thing.
Yep, that's great. And have you, I mean, are there things about that, I guess, and the impact more broadly that you think that traditional VCs don't get yet, if you see what I mean? Because that is part of what you've done is, I think is really interesting, is you have engaged with some very big names in the standard VC world. But are there things that you find that they don't get about impact?
It's an interesting one. I think empirically speaking, lots of fantastic impact companies have been backed by traditional VCs. And I mean, WageStream that I mentioned there have folks like Balderton, North Zone, British Patient Capital, some like really big commercially minded investors have come in and backed that company. And that's just one example. There are a number of other really big high performing impact companies that have been backed by impact funds, but also by a sort of traditional VCs. So I think those worlds are coming closer together than they have been. Where we are seeing or hearing of challenges, they tend to fall into a few themes. One of those themes is that impact is one thing, rather than, as in it's binary, it is or it isn't impact. Right. Whereas actually we think impact, there's a spectrum of impact. Impact can look different for different people. There are different impact preferences and profiles around who you might be reaching, how many people you might be reaching, how you may or may not be trading that off with the depth of impact per person, and some of these sorts of elements. So the idea that impact is just one thing, I think, is quite persistent. Second piece is that, and this was more the case maybe 10 years ago than it is now, but is the idea that impact is to some extent philanthropy rather than something that's driving commercial returns. And I think we've increasingly seen a shift towards a mindset where doing impact well unlocks commercial upside. And some of the levers I've just talked about are examples of that. I think some traditional funds really understand and are looking for that. And other traditional funds are maybe more in a place where they still think, this is a little bit different to what we do in our day-to-day. And that's probably the frontier of changing systems through changing minds that we're trying to act on a little bit at BSC and Impact VC as well.
Yeah. And I mean, have you noticed a shift recently? I mean, there's obviously been the backlash against ESG and diversity initiatives, particularly in the US, particularly linked to the Trump administration. But have you noticed more investors paying attention to impact, or is it now sort of, or is there a retreat? What's the sort of feeling from your position in the market?
Versus 10 years ago, absolutely many more investors are paying attention to impact now, both social and environmental. Versus 5 years ago, still yes, I think, but it's less clear-cut of an answer because of some of the elements of backlash that you mentioned. And also because 4 or 5 years ago was probably the peak of capital flowing into climate tech in different ways. I think the fundamentals are still there around impact in the context of this backlash in terms of impact companies are often tackling big problems, needs not wants. I think it's a phrase BGV have talked about. I think it captures a lot of important things. There are some big mega trends, including in climate, that over the long term are only going one way. And they might, in the short term, experience ups and downs. But I think in the long term, it's quite clear which direction they're going in. And there's commercial theses around that. And to some extent, it might be a good thing that some of the heat in the market has lessened off slightly.
Yep.
Around some of the investments that are made with some of those things in mind. And I think tangibly speaking, we haven't seen that many folks behave or invest differently in the context of the backlash. I think there's a lot of noise. It's not yet clear how much there's action in a negative sense around some of those negative themes and trends.
And what's one piece of advice you'd give to a new founder trying to raise funding for a mission-led company? I mean, you see a lot of impact investment firms What would your advice be for a founder thinking about trying to raise money from them?
It's probably similar to the three I mentioned earlier around intentionality, big vision for impact, and the link between the commercial and the impact case. I think if I was distilling that into one thing, it would be balancing being problem-led with commerciality. So a problem deeply experienced by many people, where solving that problem drives commercial outcomes as well as a positive impact. It's kind of the thing to, I think, look for and try and distill. And I think maybe there's a linked point there that VC might not be for all of the models that are trying to do that. And that's okay. There's other investment out there. VC is a small part of the world. But for those that do have those attributes, I think it can be really powerful, and leaning into some of those themes can help unlock some of that.
What's your favorite part of what you do? I mean, you have a slightly different answer, I think, probably to most of the people we talk to on the podcast, and they're often founders. But what do you enjoy about your work at BSC? And is there a bit you enjoy a bit less as well? The good and the bad.
So I think the best bit, the bit I enjoy most, is the relationship element, actually. That being an LP means you're thinking in decades, you're forming relationships in decades, and you get to live the journey with people and the ups and downs, and hopefully you're net positive through both the ups and downs. Building those relationships with really interesting people doing really interesting things, I think is something I deeply value and enjoy. And if I'm sort of sneaking in a second one, perhaps slightly cheekily, it's around living in the future a little bit. Yeah. And trying to build tech and working with people who are trying to build tech to make the world better on a sort of multi-decade time horizon lets you lean into and think about and experience some of the future a little bit earlier, and maybe shape some of that along the way as well. So I think those are sort of the bits that I find most rewarding day to day. The harder part, the less fun part. At BSC, we get approached by 80 to 100 firms in venture alone every year for investment, where they see impact as part of what they're looking to do, and they want to work with us as an LP. And it's a great privilege to get to speak to all of these folks about their views on the world and where it's going and what investment choices they're looking to make around that. And that's fascinating. But we invest with 3 to 5 firms a year. So there's a lot of those firms that we ultimately aren't able to work with. And investing involves making choices. That's part of the job, but it's still no fun to turn down working with people doing fantastic things who you'd really like to work with. So that's the part that I find most difficult, I think.
Yeah, the saying no is hard, isn't it? Yeah. So finally, how can people learn more about Impact VC and potentially get involved, I guess, as well? Because it'd be interesting to see to hear what you think is next for Impact VC and what you're hoping to achieve in the next little while.
Yeah, for sure. So the really tactical answer to that is www.impactvc.co, which is where
we will share that in the show notes.
Yeah, excellent. And that's our website. There's a link on there for folks to sign up. People who work in venture and are interested in impact, very welcome to join that community. When you sign up, you will get access to our monthly newsletter, which is the easiest way into all of the events and resources and training and all that sort of stuff that we do and look to build. So that's how to get involved, basically. In terms of where it's going, I think we've seen some really interesting things. We've made some really interesting and I think valuable progress on building a global community of VCs working on some of these things, building several playbooks and resources, a few more that we're working on that are coming out, and training and coaching for VCs looking to work on some of these things. I don't think we've solved any of those problems yet. I think we're still going to be working on some of those things in the years to come. And I would probably emphasize one thing that's really top of mind and probably will not be hugely surprising to you or listeners is around AI. And I think both in terms of how folks are using that in their operations and in our context, we're thinking about using that for impact practice in different ways to solve some of or kind of automate or have first goes at some of the more logistical mechanical elements of that to allow more time on the judgment-based decision-making around impact. That's sort of one piece. And the second piece, which is arguably actually bigger, is thinking about responsible and impactful uses of AI to solve the big challenges of our time, but avoid the really quite significant downsides that are associated with the technology itself and applying that in different ways. And I think we've got a working group working on that at the moment, actually, which your colleague Dama is part of. We've got some resources coming out in the next few months around that. And I think there's a reason this is the big topic right now. And I think it's the big topic for us in the community as well. And we'll do a lot on that in the next 6 to 18 months at least.
Great. Well, Dougie, thank you so much for joining us today on Tech for Good. It's been really, really interesting and good luck with everything in the future. If you have suggestions for guests or topics we should be covering on Tech for Good, do get in touch. And if you're thinking of starting a Tech for Good venture and looking for investment, don't forget to check out bethnalgreenventures.com to see whether we might be able to help. That's it for this week. Thanks for listening and goodbye.